everyone. Welcome to Top Trading Edge. And today's video, we're gonna this is weekend video, so we're gonna take a look at the market since market is giving us the little path where the market is heading, and many people are asking that uh, is this bottom out or is gonna go down, and how far is gonna go down, or is gonna be reversal from here. So many questions people would have. So in this video, what I decided that let me start a new web series. In this web series, what we're gonna do is we're gonna discuss more about the what I'm thinking is to create a new financial physics here, where you understand with me, and we start the series with the series part one, part two, part three. So at least whenever I talk about something, I would always then you'll be on the track that what happened in series one, then you can relate that series one to two and three and four onward the way market moves on. If you have seen series one, then you would know, because many people keep asking different varieties questions. So to avoid that, I would guide them, hey, you can go and take a look at the series one, series two, series three, so at least you understand, because without foundation strong, we won't be able to move uh, forward. So for that reason, we're going to talk about in this uh, video, particularly I'm going to talk about more about financial physics. Now many people think, what is this financial physics is? So in this financial physics is basically, it's like a discipline that studies this financial market as a system. So we're going to more talk about with the system, but I'm going to add a lot of uh, the technicals. I'm going to add a lot of data. I'm going to add a lot of geopoliticals also with the uh, all three combination, and create and understand the system. And that system, once you understand the system, then you will be able to take the right decision whenever your entry or exit zone would be, where whatever the symbol, stock, or time zone, whatever, whenever you want to buy something. Because many people always ask me, hey, what will be the price to exit for Tesla or Apple or any stock, or where can I exit, or when can I enter these, right? So that is basically, you can you can copy somebody's numbers, but again, what I suggest you is to learn the basic, at least have a little foundation, so then you can grow further. Otherwise, what would happen is you might not able to catch up. Maybe it takes a little time, that's fine, but learn, create the foundation stronger. Once you create the foundation stronger, then you will be able to take a right decision. Otherwise, 85% people lose, including all the institution. They all lose money into the stock market because they do not have the proper navigation. And I'm telling you right now, they do not have the proper navigation because they don't have the foundation. So what I'm trying to teach you here, guys, this is not a entertainment video. If you want to, if you're looking for entertainment and skip the videos and something, then I would tell you right now, this will be a little longer video, guys. So if you want to grab a coffee, lunch, dinner, whatever, popcorns, and sit relax here, maybe 30-40 minutes video. I'm sure 40 minutes video would be, but very important, because this is the foundation video I'll be teaching. And then from then you'll be able to know further, more in depth about the market, and understand the things, what how things are happening. So if you're looking for entertainment or something, then there's a left side on the top button, a back button. You can click on that, and you can there's a lot of on YouTube video that they can entertain you. They really entertain you, nice. Excuse me. So um, what we do is now start with the video. So the disclaimer, this video is for education purpose only, not a recommendation to buy, sell, or any sort of stocks or investment. For your financial advice, please consult with a professional financial advisor. All right. So uh, basic first, I'm gonna look the market, and show you what exactly market is doing currently and how far. Because when the market was here and slowly going down, we were testing this, all the supports. Since all the supports are broken, then it gives you a it's like a GPS, right? Once you turn on a GPS gives you a next, GPS gives you next left, right, then again right, left, third right, fourth right, left, like that, right? You turn. So same thing here also in GPS. So we don't, nobody has a crystal ball here. So if anybody says something, that's all BS. What we try to, what I teach you guys is to find the right niche to understand. whenever I speak, you learn, be with me, then you will be able to understand what I'm speaking. Otherwise, if you think you are getting bored or you have to skip this video, that means you are not with me, or that means you still you need a little time to understand the market. And those are the people who lose the most money out of it. The people who find the interest into these kind of videos, who has a really content, gives you really 20 years of experience content. It takes experience. Nobody you will find on YouTube where you can find this kind of content who has a not just the technical analysis, not just the data analysis, not just the geopolitical. There are different kind of people, different lectures they give you, and then they move on. I only have like barely 67 even subscriber. I just started the channel 3 weeks ago. So what you're gonna learn from here is not at entertainment, is all about education. So let's start it with the video. So as you can see, the market was here at 480, 480. So basically, this is the S&P 500 index. I took the major S&P 500 index because they have the highest weightage in the market, and this is the main indicator for the market where the market is going. So just to give you overall view, so I will always look at into the S&P 500 index, and then we go from here. So let's take a look at it real quick. It was 480, and then as you can see, the blue line is 50-day moving average line, and then this is 100-day moving average line, purple, and then the red is 200-day moving average line. So market try to break 50-day moving average, and then the 100-day moving average. So as you can look from here to here, when market drops from here to 100-day 50-day moving average is almost 3%. 3% market drop. That means um, easily 2000 points down in the market. uh, so that is a lot. Anyway, so that, now as you can see, market keep crashing, as you can see, keep going, and then it goes to 420 and it bounced, right? So well, if I just want to show you a little bit in the back here also, because market always does the similar kind of things, right? Always does, right? Market always goes zigzag, just like our pulses, just like goes are like this. But if you look at the overall view, now I'm going to go back a little bit here, and you look at these lines. Red line is 200-day moving average, this is 100-day moving average, and this is blue line is a 50-day moving average. What do you see here? You see the blue line is always on top, 100-day moving average is always on top, and underneath is 200-day moving average. So perfectly going from the pandemic. You see that pandemic happen, and it crashed 35% market, and then the every changes happened right here. 50-day cross 100, and 50-day cross below 200, right? But then as you can see, Fed comes in and announce 0% interest rate and easy tapering, and pumping all the money into the market, and look at the market took off. And you can see that 50-day first crosses the 100-day, and then it crosses 200, and then the 200 goes down, 100 goes up above the 200, right? So this is the scenario where it goes, and it keep going further up and up and up. So since then, how many time it touches, it try to test. So if let's go back here, you see this every time 100-day moving test, and then it bounce. 100-day moving test is bounce. So this is quite a bit correction. Remember, when you from here to here it happens, many stock goes down quite a bit. Excuse me. So same thing here. Is keep doing 50-day testing, because market was super bullish right here, right? 50-day tested. So this is quite a bit. Look, 1 2 3 4 5 7 days market constant up, and then it goes down here like 15 days market dropped continuously. So when this happened, people were crying, what happened, market going to crash? You see that? But then it tested 100-day, and then this tested the sloping support from here to here, and it bounced, right? But it did not test 200-day moving average. This happened in October 21st. So as you can see, it always moves like this. And then we hear when we happen this 2020. So this is all from here to here is 2 years, right? 2020, and now we are here. We are here right here. So, but there is a something, if you notice here, what I'm trying to show you here is this happened in October, then this happened in December. So how many months gap? 3 months gap, right? Let's look at here. This happened, right? This happened in March 21st. These are small one. Then this one is 100-day moving average. We at least we need to check. So this happened in November. So it's like a five months gap, right? So 5 months gap, 4 month, 3 months gap like this, right? So over here happened in October, and this one happened in December. So again, 3 months gap, and now guess look at here what is happening here. So this happened in December 21st, right? And this one happened. Try to test 100 moving average in December 20. So this happened in December 3rd. This happened in December 20. Within 15 days, again try to do this. So something is wrong. Somebody who is selling, remember these are all real price action happening in the market. So whenever you read the chart, you have to see what are the action, because this is no matter what headline people runs, but at the end they come here and trade. Whenever they trade, these are the candles created. Each candle represents the one day of the work. They have to sell this, then this red candle happens. They buy this, then what, the green candle happens. So remember, this is real price action, and that's why I like the technical charts to read where exactly all these market makers and everybody is playing the game. That's what you need to see right here. So as you can see, zigzag lines are coming. So over here tested, within 15 days tested, and then again go back, right? In January we are back to 480 right here. In Look at the dates are here, okay guys, sorry, the dates are on the bottom. December 29, you see that, December 20, December 3rd, right here. So this happened in December 20, and then this happened, we were up here January 4th, and then again we tested right here January 10th. So January 10th, December 20, right? Within again 20 15 days, again we try to test the 100-day moving average, and then market bounce. So let me explain you what exactly happened in the market. There are many market makers. Market makers are nothing but the major capital holding banks, those who have their own orders goes through in and out. So many banks do not have a navigation that where the market is. They still think the market is bullish. It's just the testing. So they do trigger and they do buy. So sometimes some banks say, hey, I want to sell because they feel that market is not looking good, so they sell. But then some bank, they have more power, and they start buying here. So basic, but there is a sentiment. Remember, there is always, they use all different indicators, bond market yield, and then the all the CPI data, inflation, all this data they use, and based on that they think, oh, this is just a continuation of the previous thing, and then gonna bounce because people are here. They think, oh, because it bounced from here, it's gonna do the same thing here also. So everybody think in a different way, but at the end somebody wakes up on based on what they use different indicators, such as Fed say we have all the financial tools. What kind of financial tool they have? They have the all these treasury bonds, bond market. They check and look at the yield. Yield is what is yield? Yield is a rate of return. So it means something, you buy a car, and when you buy, there's a MSRP, right? But when you buy it and after 1 year you want to sell it, then nobody gonna pay you MSRP price, right? They will give you a rate of return. Whatever the price you paid for it, they're not gonna pay you that. You're gonna get less money, whatever the market is at that time. Right now you go and you buy a used car, you're gonna get more money, right? Because market condition changes. That's why yield is always fluctuation. Yield is rate of return. What is federal rate? Right, we have interest rate. So interest rate is nothing but in a bond market they call a coupon. What is coupon? Coupon is a federal rate. It's an interest paid by treasury, right? That's the interest rate they give. So when you buy a bond, treasury gives you interest rate. That's your coupon rate. So that's the coupon. That's fixed rate. That always remain for you fixed when you buy the bond. So I'm not gonna right now go into the bond market, but I just want to go here first. Then I will add more, because that's why I said this web series has a lot of climax. If you really, if you finish this video at the end and understand, then you're gonna learn a lot out of it, and you'll have a understanding of the real fundamental, how the financial system works and how we should proceed further to understand. Because most of the time people, they just copy things, they just believe in hope, and they just they go here and there, they have a fear, they believe in fraud means, all the fear, uncertainty and doubt which created by the medias. So you don't want to rely on those, you want to rely on reality, which are real price action. So that's what I'll try to teach you here. So as you can see, then now it tested support here and then it bounced, right? So people think, oh wow, this was all market maker game, and then they started. Yeah, it can be anything, it can be. Nobody knows the real solution. There is nothing, even bank doesn't know. I'm telling you, many banks, because there's so many banks, right? 40, 50 banks, 100 banks play these things. So nobody knows what exactly happening. But as a price action, we need to understand, because we analyze. That's what I'm going to say. If you understand the system which is financial physics, if you understand the financial physics, if you understand the technical uh, analysis, and if you understand the financial data, which is history with the data, that gives you somewhere GPS, that gives you navigation. So that's what I'm in this video I'm teaching you. So as you can see right here, so these bounce happen, people were become bullish. Oh, look at that, he's going up. This is all market maker game. Totally understand and 100% agree. Even I this all these waves I created, not the same day I created, but I did created these things, and I can show you when this happened. Because every time I always say this support tested, we need to watch. Whenever I say watch, we have to watch until it bounce back. Look, did it bounce? No, broke. Did it bounce here? No, it broke. Did it bounce here? It broke. So you can see everything bounce. Over here it bounced. Over here it bounced. But this one broke is really, so there is a pressure here. Somebody knows something, that there is something is not right. So that's why, because these are major indicators. 200-day moving average to break in a SPY, which never happened. Look, only pandemic time happened, right? Right here broke through. But after that, 18 months never broke 200-day moving average, and this time we broke, right? But people who does not have the knowledge, and they don't understand this, and then 200-day moving average breaks, and they it bounce back. Oh look, this is all market maker games, and they're just playing the games. Yes, people do. There's a lot of, everybody plays their games, like many retailers also, they just want to buy something and in and out. So there's a trader, this market gives the opportunity for everybody. It's not only one long time investor, short time investor, swing investor, strategic investors. There is a day traders, scalpers. There are so many. Even Kathy would invest for 5 years. We have a Warren Buffett who invests for 10 years, right? So there are different people have a different strategy to invest the money. But at the end, when you watch this and then you come to the conclusion, depends on your strategy. But again, we always look at this and see what happened. As you can see here, it got rejected here. So, but I did predict this, because I always go in a technically in depth, and I can show you what I when this happened. From here I already posted these. Then when this happened, I said this is going to be tested. If this breaks, then it's not a good. And I already said in December 1st last year about all that market going to crash, because it's already inflated and all. Is happening now, is really happening things. But I want to share with you, so you at least you can see what I'm talking about. So I'm going to add this one of the chart here. So I did tweet on education 7th February, right? Normally I do everyday update on about the market. So this is one of the update. Like this, you're gonna find a lot of my tweets. So I'm just going to show you on the 7th February what I add here. So as you can see, the time the market bear flag in place. So this chart is a 30-minute charts I added here. You can see 30-minute chart. So bear flag in place since last week, intraday 30-minute chart SPY. If you see a last 3-day cycle, it's creating lower high and lower low. So lower high means from lower high, lower low, lower high, lower low, lower high, lower low, but getting rejected from here. And I can see this flag. This is a bear flag, is going upward, but it came down. So this is the bear flag. And I said if breaks above this is the pennant I draw. But if you look at here in the bottom right, it's a testing major support area, and 445 that breaks, and then is a bearish sign, right? So this bear flag is means if breaks downward, not supposed to break, but it did tweak a lot. and then it broke upward, then it came down here, and then eventually it broke. So 3 4 times it tried here, um, right? So then it broke this one, and then I so this happened on 7th. After that, I also have um another one. I kept it. Let me show you that one. So let me close this one. You saw that. I'm gonna close this. So you see this one. I So this one is in 10th. That one was 7th. So this one is 10th. I'm just grabbing from my previous tweet. I said early market SPY projection, higher low, then lower high. You see that right here, right here. Now this is the daily chart. Remember, this is daily, not a 30 minutes. So because now we are going in a long term. So this is higher low, lower high. So I did not create the wave. I'm trying to create the wave, but without this candle here, how can I create the wave? So we were here and we were here, and this is the 30-minute candle, which was 1 day candle, and it trying to break. So this is the 10th, and then it over here 7th I created. I said it's supposed to break, and then did not break, and it went up, and look what happened. 458 it broke the 100-day moving average, went up, touch here, and then it came back and broke here. So this is 10th one. But I did mention here that, hey, look at this, what I'm writing here, because remember, this is diagonally going, so price always goes upward, forming a lower low. What I'm saying here, look at this, though market is climbing high, and what I'm saying here is this is a bear flag is in a play and forming a lower low. I know it's too early to say, but I'm thinking early. See what I'm saying? And third wave projection, I'm writing here, market going up, third wave projection, lower low. If this happens, then market decided 480 high is history of 2022. So I said this is the history of 2022. So anyway, so it broke right here, right? This candle right here about to break on 10th. And now I'm going to take you back to this real chart. Sorry, I had to bring you back to the old climax. So many people get bored of technical thing, but it's very, very important thing to understand that my projection, my thinking, my layout is very, very important when I explain to you guys. So you see that now from here, and look at that, it got rejected and then broke this bearish. You see this bear flag? It broke, right? And then we broke and we test this right here, and we broke through yesterday or Friday also, this one. Now this pattern I created is, look, first wave down, market always go with the down, then 100-day moving average rejected, basically it crossed, but again it rejected this area, then it broke the 200-day moving average on a Friday, right? So now always remember this moving average. You see the moving average is 50-day moving average, 100-day moving average, and 200-day moving average. Now what is happening from here? Look at this gap, look at the gap here, and look at the gap here. What is doing? Why these moving average are getting closer? That means if this line crossing, that means bears are getting heavier. Bear means selling power is heavier than the buying power, right? The moment you see this 50-day going up, 100-day distance, and then 200 days going down, then those are bullish sign. So now we are getting closer. As you can see that we are getting closer. So this, if this line cross 50-day moving cross to 100-day moving average, that would be a very, very bearish sign. That all these market has an indicator. Those indicator is not just to show you as an image. That has all the mathematics and physics behind. That's how it's been created, and that's how the system works, right? So I just want to show. I'm gonna take you to the system, that how system works. And now it's crossing here. So what I was trying to look at what I'm trying to project here. Somewhere here, it's not gonna be exact like this. It can go this way, but at the end, it's heading here. Now, how far it heading? That I will take you that side. What I'm thinking. Excuse me. So now market always wants to, depends on how bad scenario it is. So what exactly happening here? Why many people think, oh, this could be a next support, and do you think it will bounce? Well, it can bounce, but we have to also look at other side of the coin too. Market has a different side to look. You can just when you call system has a very varieties of parameters to take it as a consideration, and then you can take a decision. Otherwise, what's the difference between me and some other traders who have they have why they lose 80, why 85% people lose, and why 15% people only make in the market? Yeah, definitely money power wins also, but at the end there is a lot of you need a understanding. When you have understanding, you don't lose much. So okay, so now you see this scenario, what happened here, what I'm trying to show you here. So far, how much market is down, I want to show you the people. So if you look at from here to here, how far market is, oh, we are here right now, right here. So far we are down from the top 8%. So market is only down, you see this, 8% market down right here. You see that 8%, 8.32% market is down from the top so far till date. Okay. So just remember, and if you count 820, then market is down only 12%. So previous low was 820, then market is down 12%. You see that 12.40. So 12% market could be down, and I can see that it can happen when we will reach somewhere that conclusion later on. I don't want to guess, but I want to, whatever I say, I want to take you with me what I think and why it would happen, and then you would understand the system. So next time when I make videos, you will be part of web series 1, web series 2, web series 3, so you understand with me every time I make video. And that's how you will look. Anything you, if you want to watch fast forward movies, then you can't enjoy the movie, right? You would not know the climax, you would not have the feelings. But when you peacefully nicely go in a theater and watch a movie, then how you feel? You feel, wow, I enjoy. But if you watch a movie in your computer and you're doing two three different things, and then you watch a movie, oh, I remember something was interesting, but I didn't like it much. So just like that is, you had, but this is not a movie, this is not entertainment video. So I'm keep telling you, this is not entertainment, this is for education purpose only, and these can lead you to be a passive income, not, and to avoid mistakes in the market. So now, as you can see, these are the waves which I'm trying to based on my analysis, I'm making here, because it broke right through that. It can, tomorrow it can try to cross, but I always go each every day. I always tweet also, and if you follow me on Twitters at Top Trading Edge, this is my account, Top Trading Edge, and you can follow me there, and I am always there. So look, now we're gonna go back to here. So this market, how far it can go, right? So I'm gonna now show you what exactly happening in this market. We have to take a look at, this is all technical side. I show you current scenario happening right now. So many people think, oh, this cannot go now low because I just bought my Tesla stock at this price when SPY was here. Now my Tesla price is, I bought it at $1,100. Now Tesla is $900. Man, is that's painful. Well, look, market first, market first, market first. What I see right now, market is not trending good. So your stock also, most of the stock doesn't perform well, because that depends on most of the stock, but most likely most of the stock don't perform good when, because markets are in a market condition changes. So same thing here. Now if you take a look at it from here to here, market jump 125%. So let's take a look at it, how much market jump from here to here. 8 481, right? So let me take a look at 480 right here. Look at the right side corner, 480 right here. So look at 120 120% market ran into 2 years. 120% market run, right? So that's too much for in 2 years, never happened in history. Okay. So people think you, because people those who are bullish and those who think that oh, this is too much, and I don't believe in this and all. So I'm gonna show you something, because there is always physics behind, because it should not happen like that. So uh, S&P 500 is, what is S&P 500? 500 Fortune company. They are not Russell 2000 company. They are top Fortune 500 companies who has to qualify to get into S&P 500, just like Tesla just get into S&P 500. Many company cannot even qualify. Those who have a constant 4 or 5 years of record making profit, then only they qualify, and they have to have a certain market cap. and they should be caliber and many things, many parameters. Then they qualify for S&P 500. So this is the index for S&P 500. Then they qualify, and then they come here. So now, if you look at all these 500 companies, every company, their earnings in this period of time, 2 years, their growth, their revenue grow only 20%, and S&P 500 grow 125%. Just excuse me. Just think, is this a right number to you, or this is not a right number? Now, how do I say this is not the right number? Because when zero rate interest announced here, right? Whenever in Now we have to go back to the system with the physics, with the though it's a part of geopolitical policy and finance. So we have to get back into the little finance and geopolitical to understand. Otherwise, you will never land anywhere. Otherwise, you always think this is. Uh, there are many technical analysis. They analyze and they think, oh, this is support and let's go buy. Believe me, man. I'm telling you right here. When market was here, people think, oh, this support is gone by, and but they sometimes exit. But many people bullish, they don't have the vision. What I'm trying to show you, how to create a vision, where the how you're gonna land. So this happen. How this happen? Because we have to understand finance has a physics rule. The physics rule is tapering. When Fed comes in and announce that we're gonna do tapering easy. When they tapering easy means 0% interest rate. 0% interest rate means all the banks, they have money coming like a free money, right? As good as free money coming in. Then government also keep buying all the junk bond, right? You know that they corporate bond, municipal bond, all kind of security, all notes, basically all the notes, government keep buying those to make all these businesses don't go bankrupt. People get paid. Remember, this is most important part. I'm gonna show you here, because many people, they don't even remember what they ate in their lunch yesterday or dinner yesterday, right? So that's why I got to remind you here. You got to recall, because you will forget. Otherwise, you will not believe what I'm saying here. So in this scenario, when this happened right here, right, everybody was locked down. Many people lost their jobs. Remember, unemployment was 6.87% right here at this time, right? You remember, many people were so much the whole economy was collapsed. Lot of unemployment, people did not have money to food. Lot of big long line in Texas to get a food, just to get the food. People have no money. Many company was trying to give the free food, remember? So all this time, but all these corporate bond, those who, for example, who has a small restaurant, they can go and get a loan, and they get millions of dollar loan. Do you know that? So the small restaurant was closed for about a year, 6 8 months. He can get a he had a 10 employee. He will send his all employee home, and then he say, okay, I need a loan, and the government gives a loan for what, 1% 2%, and then he take this money and put it into stock market. That's what everybody was doing here. So what is this is, all the corporate, everybody pumping the money, including banks, because these are 0% interest rate. Tapering easy means all government keep buying, keep printing money. $10 trillion so far till date. More than $9 trillion. I already look at the number. So more than 9 trillion, 9.5 or $10 trillion so far, right here. $10 trillion. Hold on, let me bring that. So government has printed $10 trillion from the pandemic here, and that is the all kind of securities, which includes all treasury bonds, corporate bond, municipal bond, different kind of notes, all different security. So all these $10 trillion, right? So we right now we have a $10 trillion balance sheet. Fed has it. So anyway, so all this money comes into the market, right? And remember, 20% only earning growth S&P 500 has in last 2 years, and this is 125% up. So jump a little bit higher on that. So this is the air balloon right here. It happened. And I said earlier also. So this is not the right thing happen. Now, remember, market was going up. What my point to show you was the market was going up, but everybody was getting locked down. Everybody had a no job. People are losing the job even this year, this time, the December 2020. People did not have the job. People had a tough time here. And many people are afraid, how come this market is going up, Tesla going up, Tesla, everybody was locked down. How come all these stocks are going up? Right? Because people were getting money and they were putting money back into the stock market because of government was injecting money into indirectly injecting money into the economy, indirectly injecting money, because the moment they give the money to the bank, to the restaurant people, to the business people, they all the money they keep buying those stocks. When you keep buying the stock, the power of the money goes into stocks, and the stock, when more you buy, the more goes into, and it grinds higher. So this was happening. So that time when we were had a recession time, this not a recession, but it's like a very very down period of time, but market was bullish, remember, right? And then we were here, we came here, and then we realized last year 2021, oh, inflation rate is 4.5%, somewhere here. Inflation, CPI data came, 4.5% is too high. In America, we only have inflation 2%, 3%. So now, guys, focus here. What I'm trying to take you, because that's why I said this is the little web series where you can just miss a little bit, because if you miss, you would not understand. Because that's I'm talking here system. When you want to understand the system, it takes a little time. But once you understand, then you would understand my next all different series I always posted, series part 1, part 2, part 3, and that would guide you, help you to navigate your financial decision when you take. And then once you educate, you don't need to copy anybody's trade. It'll be more easier for you. So once what I'm trying to show you here is, once this over here 4 point last year 4.5%, 4.5% CPI data came, people are afraid, oh wow, this is too high. Now why this is too high, as a normal layman don't understand what is CPI data is, would be what matters and all. But you and me, if I teach you, then you would understand CPI data, what it matters basically. So when the CPI data comes 4.5%, so basically this is how it works, the financial world, where how the Fed works. Just like I'm a technical analyst, and if I read these, my indicators are 50-day moving average support broke, oh alert, 100-day support broke, oh alert, oh sloping support broke, oh 200-day moving average broke, right here, right? Alert, right? So these are the alert signs. Same alert sign Federal use it. Fed always says, remember in the FOMC meeting, they always say that, oh, we have our financial tools and we use that tools, and based on that we analyze and we see these inflation is transitory. It's transitory. That's what the Jerome Powell was saying. Now, what do you see? Is it transitory? No, it's not transitory. Look at this. What happening now? Right? Is people are a lot of people are jumping up and down right now. Anyway, so when the inflation when the inflation rises up, there is always equation system. This is financial physics. So physics works with the coin has a two side, like just like that. In a financial, we have a Fed job is to control the demand and supply. So how the demand and supply works, he's not gonna Federal doesn't go and manufacture things, but they indirectly support the system, which is demand and supply, and that's how it works. That's how this demand was created, because they inject the money. Once they inject the money, that's how it get created. Okay, though everybody was, look at this time, unemployment was way high. You want to look at unemployment, US inflation. Oh, sorry, I don't have the inflation rate, but oh, inflation I have 2021. Look at the growing, right? Growing 5%. So I don't want to go into much right now that side, because it's long, getting video would be longer. So once that happens, then inflation going higher. So this is what we need to calculate. Inflation rate, this is how we need to do. Bond yield. Whenever the bond yield grows, right now bond yield is where it is. All right, here. Look at the bond yield right now. 2.3%, right? Where were we? 1.3, 1.3 right here, like 1.4, 1.38, and now is 2.3. Why that is happening, right? So this bond yield is growing higher. So what happens is right now all the banks, so we how much, what did I say, $10 trillion, that is a part of the game. They have to reduce their balance sheet, that is I'm talking about later on. But they, stock market and bond market is almost like a $50 trillion market, bigger than our stock market. So those who have purchased their all the bond, those who, so for what is bond? Bond is nothing but the security. People, banks or many institution, or for their safety reason, they go and buy treasury bond, different kind of bonds, right? It has a different interest, interest rate on it. So if you buy a bond, treasury bond, then they have the most credit rating, triple A, double A credit rating by, and that's why people buy it for safety reason. They buy treasury bond. So treasury bond they bought in history, right? So I'm gonna explain you the what is yield, how yield works. So when they bought 2 years, 3 years, 4 years ago, right? They all these bond they've been holding, right? So every if so example is $100 bond they buy, then their interest rate at that time they bought it, they say, hey, we're gonna give you $1 a year, 1% interest rate. If the Fed give you 1% interest rate, in coupon is they call coupon rate. So basically $1 we give you every year. So you gonna, and the end of the 10-year treasury, 10 year is a locking period. So 10-year treasury yield, we're gonna give you one every year, $1. And at the end of the 10 year, you're gonna get your $100 back. So depends on the person how they, depends on the company how they think. If I were there, I would not buy, but there is a lot of different equation they do. So bond is a right now big loss because inflation kill you. 7% inflation means you already lost. If you are trying to make a 1%, you already lost 7% right there. Just the inflation will kill you. Your dollar value goes down, right? So bond is a wrong investment, but many people are holding the $50 trillion value of the bond in the market right now. Those who are holding, now, what happens? Last 40-year interest rate was going down. Remember, now focus, guys, here. Last 40-year interest rate was going down. If you look at the history, interest rate was going down 40 years. Now, all of a sudden, it becomes zero, and now they want to climb. So, what happens to the bond yield? What is bond yield is? Yield is a rate of a return. So, when you invest it, government gives you 1% coupon rate, which is interest rate, right? That's the Fed rate. But then you bought it 2 years ago. Now, what is the value of your bond? Though you're gonna get $1 every year for sure, but of your bond value goes down because you bought it at the time you were locked in for a 1% interest rate, right? So now your bond value goes down. It's a catch 22. Depends on how people take that bond. So some people they get the bond. So $50 trillion bigger than our stock market. So those bond value is going down. So bond yield is 2% right now. Yield is 2%. So people who are holding the bond, they are losing money when they bought it comparatively at the price when they bought, because that time interest rate was low. Now what exactly happening is depends on how smart people think, but I'm just trying to explain you right here. This is the way to calculate this is the how physics works in the finance world. Whatever the inflation is the biggest hurdle for the yield, and I explain you how basically interest rate basically works on it. So whatever the what you may call it, the CPI data, because CPI data is our inflation. Now government of gives you a rate, right? Federal rate is right now 0%, right? If the federal rate is 0% minus how you reach to the yield, because yield is not like a defined rate. So but is market always fluctuates how you get to the yield. So there is no defined rule for define rate for it, but this is how market understands. So market knows the whatever the federal rate is minus CPI data, which is inflation. So they do not want inflation to go higher, otherwise it's a big problem. So, but I'll go to that side. So mm, again, Fed rate minus in, inflation. So inflation is 7%, right? So you got to minus. So federal rate is 0. You minus 7%, 7. So and whatever it comes out is your yield. So right now yield should be 7. Negative. We are into negative right now. Can you imagine yield is negative right now? So we have a big problem. That's why yield. So everybody is feeling the pain. The moment interest rate goes up, now remember, moment interest rate goes up, the yield goes up because those who bought the bond at that price, then it's too expensive for them because nobody gonna buy because say, hey, I'm gonna buy a new bond which have I can get a 3% now. You bought it at the 1%. Now I'm getting 3%. So the higher the interest rate goes, the coupon rate, which is interest rate when you buy a bond, you're gonna get a bigger. So the old bond hold the lower value. You follow? So those people right now, all these people who have invested money into it, they are feeling the water under the legs, and that is a big disaster. But so many people think, oh, why they don't just go and sell right now, right away, right now? Well, there are many banks, they cannot take the action without having the reaction, having the actions. So in another word, is Fed has to announce the policy, and if they want to change any, then they can sell the hey. Otherwise, on a based on guesswork that hey, Fed gonna do this, and you sell trillions of dollar bond with a loss, then what happens? Bank lose a lot of money because we talking here a lot of trillions, so they don't take action. They would afford to have lose more money after interest rate announce, right? So that's why they lose a lot of money in the market right now, feeling the pain. So let's talk about feeling the pain. So you see the BlackRock. Look at the headline. Just stop. Investor want the Fed to quit buying bonds. Till date, Fed is buying the bonds. Means they are still tapering, easy tapering going on. So Fed just today announced that from I think they said around 10th of March, when the CPI data comes in, they will be stopped buying from that day. And then yeah, 10th March they'll be stopped buying. And then what does that mean, stop buying? From that day they'll be stopped buying, and then they're gonna tightening the tapering. In another word is they're gonna pull out the money from the market, which is FOMC meeting comes in on 16 March. So from then 16 March they'll be pulling the money out of the market. So that's called they will create the recession. That's their just like they pump the money into the market, they have to now create the they have to pull the money out of the market. Same thing. This they will pull the money out of the market. That's how they have to do. There is no if you have inflated, you have to deflate. That's the equation. So they will do that, and that's why this happening now. I want to show you right here. Oh, okay, where is it? Okay, so another point I want to just show you right here. So federal say you guys all know that they have they made on this Monday 14th February they call emergency meeting, closed door emergency meeting they set up federal on Monday, which is tomorrow. They have set up the meeting. Now why they have to do that meeting? Look, they know they did not disclose, announce anything, but this is what they have announced. On a February 10th, Federal Reserve Board released hypothetically scenario for 2022 bank stress test. What is stress test is? In addition to the 5% scenario, bank will large trading operation will be tested against the global markets shock primary test. You see that? So these they want to make sure the Federal Reserve Board, Treasury scenario to annual bank strategy. So they basically all these banks they want to test it just in case if something happens, recession or anything like that, then what? So they want to prepare for the worst. So they already circulated this to the all different banks. So we have to be little vigilant that what would be the outcome in locked door meeting. Okay. So this look, these are the dots we have to fit, and these all bank can see. So this happened, right? When this happened, now what is this? CNBC News say federal comment on a rate hike. So these all these uh, who are these? They are San Francisco Fed president. Then Tom Burke, also Fed president. Then this guy also Ralph, Atlanta Fed president. Then James Bullard is also St. Louis Fed president. All these genius people, they also saying that hey, we we are in a trouble and we have to increase the interest rate ASAP. They are not somebody from financial institution and just coming out for their personal interest to speak. Could be personal interest, could be not, but all these different people are coming say hey, we are in trouble, and I can see myself that is we supposed to take care of this problem last year, which we did not take. You know this guy, right? Jeffrey Gunlock, bond king. We call him bond king. Now this guy, look at the treasury rate, 5 year 1.93, 10 year is 2% right now, is way high. That's too much high. So what he says is there is a 1 in 3 chance the Fed will increase the rate by larger than usual 50 points. So Fed said 12.25. He said larger than 50 points. If we don't do that, and I said first time we should do 1%. Even I tweet also, I said we should be do 1%, but 50 point they are talking about right now here. So 50 point means all the 50 point they have to increase, then the bond yield goes up more higher. So the bond value goes down. So those $50 trillion bond value, whomsoever are holding, they depends on types of bond, different bonds. There's a junk bond, there's a corporate bond. They depend who gonna buy, because when somebody wants to sell and nobody's buying, because they know my interest rate is going up, so people pay less, so people have more loss coming. So that is the bigger worry market has it, and that's why people are feeling. So so that's why these people are talking about that this can happen. So I'm going to close this, and that's why this stress test coming in the market right now. So yeah, hope you understand this, all this scenario happening. I'm going to try to relate those things, so whenever I say something, that they have a meaning on it. Another one I'm going to show you. So people think, oh, what is this? Okay, so let's compare with history also. Fed has in 1981 we had the highest inflation, and that time inflation. This is the federal rate. At that time, Fed rate was 20%, 13%, 12%, because we had inflation. How much inflation we had? 1981 inflation was 11%. So normally, always inflation rate always has to be below the interest rate. So what we have interest rate now 0, and inflation is 7.5. Just do your math. Is mind boggling that how much money we printing, and just trying to pump the inject money into into the economy and keeping everybody happy, but that happiness is not gonna last longer, because we have a inverse relationship right now going on in the market. Physics has to be balanced. If the physics is not balanced, is uneven, then the problem. And federal job is to balance. Their job is to balance. They did not balance, then the problem will happen. That's why the recession happens, right? That's the problem. So federal rate was 20, and this one inflation was 7 11% right here. You see that? So we are so now look at the math you can do right here. What should be the yield? Interest rate of 16% minus in 2020 81 you minus 11%. So you still have interest yield is 4%, 3% at that time. So that is considerable, because as long as your inflation and rate is under control, you can manage based on the economic circumstances. But we have a opposite right now. So this is bad, and that's why I tweet this also, that this is not the right. And I said, look, CPI data day after tomorrow, I see inflation is above 7%. I tweet that too. And market crashed that time 520 points. So these are the scenario which is telling us that hey, something is not right. And now I'm gonna take you to uh, now what BlackRock is saying. They feeling the same way. The U.S. Federal Reserve should stop buying the bond immediately to contain the to rampant inflation. And top investment manager at the BlackRock. So they also said that. Jeffrey Gunlock also said that. This is the market condition. Now here is the one what I was trying to explain you right here. Show you. I believe rate hike 1%, not half, because we are at the zero level. We need to start at 1%, then half, and then the quarter. Since we got a good job data, and we are short of 2.2 million labor force compared to. But anyway, so if you look at these right here, the support line is right here, and every time you see these lines are going here, these, that's where the recession normally happen. So whenever yield this, so this is basically yield and recession tools which Federal uses normally. So whenever the yield goes higher, is higher chance of getting closer to the recession, right? So right now we have a 0% interest. Remember, interest rate is 4 or 5%. Then we Federal has a tools to lower down the interest. So pricing power increase and people go and buy, and then market will be all right. But we have a opposite situation right now. We have a zero interest rate, and now we have inflation is higher, and yield rate is already we are here. Now what would happen is this is 2% right here, right? You see the two. So we are here, and now interest rate goes up half a point. The market yield goes up, up, all the way up. What that will create? Recession. How that recession happen? Because remember, now I'm gonna take you right here. Government takes the power away from you. Same thing. They give you power. Over here, everybody did not even have the food. People used to be in the line to go get a food, but some people gave, government Federal gave money to people and say, hey, you don't need to go and work. You can stay home. I'll give you money, and then those money goes into stock market. Same thing, right? All these different business people, they pour the money into it. This time everybody was locked down, but economy was flying high. I mean, market was flying high. So this was wrong, was happening. Same thing they're gonna do now here. Now, whatever this fall you saw, this rainfall, this is just a trailer. The whole movie supposed to start later on once the market, like I said, this is what you need to see right here. We have to understand the physics, because this is right now yield is only 2%, and government will be stop buying. Fed will be stop buying, so they'll be not printing. They will be, excuse me. Do you guys know, right? Probably that they said we're gonna reduce our balance sheet. You know what does that mean? After they increase the interest rate in summer, we're gonna reduce our balance sheet. What does that mean? Market, they already increased the interest rate, already existing bond, they're gonna go into the drain, and plus they're gonna reduce their balance sheet. When they start reducing the balance sheet, means the Federal Reserve who prints the money, they're gonna now sell those securities, bonds, whatever they have in their balance sheet, they're gonna sell into the market. Just do your math. If the company who manufactures stuff and they are selling the stuff, they basically sell it to the people. uh, I mean, not a wrong example, but somebody who buys the stuff and then all of a sudden he said, I'm going to sell you. What would happen to the market? So when they go all the bond into the market, bond already have a difficulties, and then mm, they will Federal try to reduce the balance sheet. They're gonna sell in the market, all $10 trillion, right? Where they have to reduce their balance sheet. So when they reduce their balance sheet, what would happen to the bond market? Bond market have an inverse effect, and these will kick in crazy, and then we have a recession, because people will not have the money power. Why will not have the money power? Because when they start giving money here, nobody believed that the stock market will fly, because everybody was locked down, but market was flying. So every time recession happens, you market feel the first. These will You will see the first, and then people on the street will feel, oh, we have a problem. So same thing like in 2008 time, right? 2006, 2007, when we had the market was feeling, market was down. So I'm going to take you there. If you want to see right here, I can take you in that one. Let's go monthly chart. I got to take, okay? So that's why. Oh, okay, right here. So right, Y2K, 2008, I remember the USA enter into recession right here, I create right here. So we created this USA enter into recession, biggest financial fraud. A lot of things happen because remember, whenever recession happens, everybody get bankrupt because they took a loan, they cannot pay, and then there's a lot of employees and they got to pay there, and then there's a lot of liabilities, debt, a lot of things happen in the market. So in 2007 to 2009 happened. So look here, look at this, my cursor on the bottom, read here, you see that September 2007, 2009, 7, 8, 3 years. This whole process is 3 years. 3 years. So this is a 1 month, one candle, 1 month. So I'm gonna make it weekly. So at least you can see if something, because I'm way back. Oh, 2000, sorry, 2000, 2000 right here. You see this? So this happened and we dropped like this. It took 3 years process, right? Remember, 3 years. And then look at the level, how long it take to reach back to this. Look at the bottom date, March 13, this level, right? I got to create the level. So this price we achieved back right here on when, look at the date here, April 13, I mean 2013. So this happened 2007 and it we rectified the issue at 2013. So 6 years process to reach back this. So somebody who bought a SPY at this price or whatever the stock they bought, many company got bankrupt, many got reshuffled, many good company was 100, $200 stock become zero, $1 like that. So all this process can happen. So this is what I'm trying to guys show you, that one thing guys, remember, hope. The people who carry the hope in their life when you play the stock, then those people should not enter into the market, because hope is the only one element which make you lose a lot of money, because the people who do not have a clear fundamental, they lose money. Why? Because they believe in hope. Stock market is the place where you carry the hope, because your fundamentals are not clear, and that's why you're losing the money, because you thought, oh, I hope this will go this way, now I think this way is gonna go. No, you nail it down, why and how and what, then you reach to the conclusion. So you see this what happened right here, right? 6 year happened, right? So same thing I want to guys show you here, that we are into the same category. It's a similar category that we can happen, because everybody think, oh, market is bullish right now, everybody is a solid power. Yeah, because solid power came from, let me show you. Remember guys, there is solid power. When the solid power comes, when they start pumping here, it takes a couple of years, then the power comes to the people hand, because people have a lot of people bought a lot of stocks, they made money, they pull out of it. So just like that, slowly they reach here. Now the government starts on a 16th March. You're not gonna see this, you're gonna see a big, it can happen, you will see it. It's a lot of everything doesn't happen in one day. It goes like this. That's why we call it, this is, look, when this happens like this is called higher high, higher low, higher high, higher low. Over here now, there is no higher high. Now this is higher low. One time higher low. That's it. Now higher. This is not higher high. This is lower high. Read this. This is the higher low started, but look at this lower high. I wrote down here. This is lower high, second wave, lower high. So whenever changes the lower high, it goes like this now. It can go like this. It depends in the market. Market will decide, because this scenario, whatever we have, bond scenario, market scenario, because what happens is now all these earning will start when all the company, and then they will have a, I told you, like, now people are not, all the company will not perform well because of the demand and supply issue, inflation issue, market liquidity issue, interest rate issue. Just imagine, people have so much, many company have a debt, they have billions of dollar debt, they have to pay interest rate, and now interest rate goes up, then interest rate goes up, they have their rate goes up, then their earning also will suffer. And when earnings suffer, what happens, what market does, and plus market, there'll be nobody in the market to buy, because people are already in the pain. They will have a lot of pain in bond market, yield market, wherever they have invested money. So people will have a difficulty. So so now hope you understand where exactly I was going right here. So that's why read this and I tweet this. Goldman Sachs as a recession downward. Look, Goldman Sachs, what is it? Goldman capitulate cuts price S&P 500 to 40 from 4900 and downward recession downside to 3600. What does it mean? So S&P 500 4900 to 36. So 360 they think it can go to 360 SPY. What did I tweet here? If they would have higher top trading edge, which is me, they would know 2 months ago. I said not late. Still, you can follow me on early alert. I already made a few videos, so I also made a few videos. But remember, guys, I just started a YouTube channel, so and I'm not a good polished YouTubers. I got my content has the tools which I only know, and then I can execute. But people don't know. People just like the entertainment. My channel is not entertainment. So look, top seven drops. I made this video, which is, it's a good video where you can understand where market is. I was talking about 3 4 weeks ago. I made that. Then this is one stock market find bottom. Then uh, there was another video also, 2022 stock market deep dive in analysis. So I made few videos where you can see a top trade. You can type anywhere in Google one word, top trading edge, and if you can subscribe, you will get all the alerts and click on bell buttons and icons right here like this, and then subscribe also. In fact, I would highly appreciate for your time and giving me opportunity to wish to you guys and subscribe. So I will definitely put my heart and soul video like this making, so at least you come to know, learn to know a lot. um, right, so I'll put this on a side. And so what I was trying to show you that Goldman Sachs says that it can be a from 49 492. They were here, they're projecting 490, but now they're saying 360. So they're saying it can go to 360 right somewhere right here. This support they are finding right here. So Goldman Sachs says they can go to here, right here. You see that? That's what they are saying. But what I see right now as a chart technical analyst, I see a huge gap here which never filled here so far. If you guys are with me, see this gap right above, there is a gap here. That gap never filled, so that gap has to be filled. If you ask me right here, that I've been watching, which is 400 right here. That gap has to be filled. See that? Because remember, these are like I'm far away, so you can't see the gap. But now if I go closer, then you can see the gap. See that gap has to be filled. One day it will fill, and I have a no doubt on that. So there are many people now was asking me about Tesla stock, Apple stock, this stock, that stock, how is gonna go because it's already sold off. Many people are asking me, Affirm was $80. I said that's the selling price. People say it's gonna be 58 now. Can I buy this? I said, look, it's up to you. But if you ask me, I would not buy because market condition is not supporting. If a market condition support you, I would buy. But if market condition doesn't support me, why would I go and buy that stock? Because that stock doesn't qualify for this market condition. So everything can be a nightmare here right now. So why would I would wait for the market come to me and then I would enter. So I explained it to you. It sometime market situation like this is not this drop and come back. Remember, this is not this drop and come back. Why? Because I explain you the whole situation about the bond and yield and the market and inflations. That is the core foundation of our economy system. That is our physics. That without that physics if you don't have the knowledge, then we always think in a hope. Oh, this is just a support, because just like any trader, oh, I know the how to trade and I can just buy support and buy this, because there are many people on social media. Oh, this found the support, now you're gonna go this way. No, this is not that. You have to understand, deep dive in and analyze the whole scenario. Market will not come to you. And what are the actions? Remember, no, did anybody know about the Facebook that from 350 to drop to $250 and then $200, right? Just like that, market does, and it's not market did one. They did Netflix drop 700 to $300. They 350. They dropped the DocuSign. They dropped it. DocuSign they dropped crazy. So all this thing, air will come out of the balloon already. Look at the look at the DocuSign. What happened to Docu? It was 300, 200, $300 idea, and then now is what, $100, $120. Facebook. Nobody even believed that Facebook would do this, right? And did, right? I'm not gonna go into the analysis of, because I already did this. I used to say all this is gonna go down and all. Now it's $200. He's heading down also. Same thing. What else? Many people asking about Tesla, and I said Tesla is is gonna break. He's testing this support. People believe in hope. Remember other day Kevin, day before yesterday Kevin bought two. So, but he I don't know what his plan is, but he's breaking the support. Just maybe tomorrow it can go up, but eventually the whole market condition changing. So this is not the good thing. So I'm not against Tesla, but I'm a bullish of Tesla. But at this moment I would not, because condition is not helping me. So once it broke this 200-day moving average, then it's gonna go down. And my price target for this one is, I don't want to even discuss, 580 or something like that, 560. Mm, yeah, 560 right here. So I'm not, right now we're not gonna do. I'll make another video for those, all the different stocks. But maybe one day I'll go live, and I can go through all the stocks you like to see. So let me go through the few things. So this is just, remember, guys, this is not that we can just be bullish and what will be the bottom and all. You always need to give a market the time. Market will automatically will come to you and take your decision. Take your market automatically will come to you, and then you would know when to buy, when to sell. So understand this fundamental, what I explained it to you today, which is very, very important part of it. So understand what is CPI, what are the data is, and based on that, you can go. So now government will start, uh, stop the government going to stop the tapering and easy, and then they're going to tightening their tapering. So when they tight, the market will they will pull the money from the market, and that is, we have a two different thing. Not they're going to reduce the balance sheet, they're going to increase the interest rate. Plus already market has a $50 trillion of bond. They are also will be suffering. So may people also do effect. Plus all the retailers, people who are in the house, who gonna lose the job, who gonna have a difficulty to buy because they will not get a loan because of expensive, because the market will go. When federal says that we're gonna do tighten the tapering, means we're not gonna give a loan to you, we're not gonna have you're gonna pay higher interest rate, you're gonna have a more tight the credits. So there's a lot of tightening thing will happen to loan you the money, you follow. So then that effect will go to the market, and then all the company will perform poor. So you got to give a third earnings, second, third earning of 2022, and then they will not have a good earning. Because remember, when economy was pumping money, people did not have the food here, but money government was printing. Just like that, now government going to start in March. Then people will start feeling the pain in end of 2022. But market reacts early. You follow? Look, market started reacting from here, right? The moment market knows, because all these people know what will be the effect. So market reacts early. They take all these things, and now market gonna drop. Oh, market is bullish, economy is bullish right now, everybody think economy is bullish. They don't understand the government, all this financial physics, financial based on financial physics. All these bank and all, they take action early, and that's how they get out of it, or whatever they want to take actions, and they invest money. So many people are, oh, where do you invest money? All this money, where they go? Well, in this kind of scenario, people go into the some sort of different kind of commodity which has already deflated commodities, not like inflated one like oil and all. Oil can go, it depends on, maybe, but midterm election coming, and also you got to be very careful. Maybe a three digit, and then you got to be a little cautious. But there are a lot of commodities such as gold can be, but yeah, emerging market also people put money into it, because emerging market means those are third world countries, some of the Asian country where have a lot of manufacturing going on. So those are the area people put money into it. So that part we can talk later on. We can more in depth we can discuss about it. Other than that, I think pretty much I try to cover here. Maybe if I forgot because it look like a video is too long now. So let's get off the video, and I'll make another web series number 2, and I'll be keep posting few things here and there on Twitter. So if you guys want to follow me, like I said, you can follow me on right here. My Twitter account is right here. You see the top trading edge, and I always post my comments here. You can reach me any questions. I always post a lot of things. I post here, so you get the early alerts. And on YouTube I post sometime, but mostly I get a time on the weekend and the evening time, so I post some videos. So on like, subscribe on YouTube, I would highly appreciate, guys. And if you like my contents, please mm, give me thumbs up on on YouTube also. All right, so until then, thank you for being here. Have a good night, and have a healthy, happy next week trading. Thanks. Bye.